Hello and welcome to Module 6 of the Forex Complete Solution Basic Trading course, Trading Trends and Ranges. Before we enter into any trading position, our first job as traders will be to evaluate market conditions. By correctly evaluating market conditions, we can trade accordingly. We'll be evaluating whether the market is trending or trading in a range. All markets provide many trending and ranging opportunities, and by spotting these opportunities, you will be able to determine the trading environment. A trending market is one in which price is generally moving in one direction. Over time, price may go against the trend every so often, but over the longer time frames, the price is trending in the same direction. Trends are usually noted by higher highs and higher lows in an uptrend, and lower highs and lower lows in a downtrend. There are three main parts of a trend: the primary, secondary and minor trends. The primary trend may last years. The secondary is a shorter term trend within the primary trend and may last 3 months or so. The minor trend covers a shorter time frames, anything less than 1 month. And each trend becomes part of the next longer trend. So the minor trend makes up the secondary, and the secondary is part of the primary trend. This is where we see our peaks and troughs. A main trend in the main trend. See, no market will move in a straight line. So even in a strong uptrend, we will have retracements in price. Now, a retracement is a temporary reversal in the direction of the prevailing trend. It does not signify a change in the larger trend. It's just a minor pullback on price. So in general, it is good practice to trade in the direction of the major trend. And a trend, it's a simple but very effective tool to get on the correct side of the market. So we will now look at two opposing markets. We'll be looking at the USD JPY, it's the US dollar versus the Japanese yen in an uptrend, and the Euro USD, that's the Euro US dollar in a downtrend. So I will begin with the dollar versus the Japanese yen, and I will pull it up on a longer term time frame here on our monthly chart, and we can have a look on how to build our trend lines. So you have your blank chart here, as you can see. So this is a monthly time frame of your US dollar versus the Japanese yen, and this is going from 1999 all the way up to the present day. So where are we today? So we're going to build our first trend line just to get the direction of the market today. So again, we're using the Pro Real-Time Charting system here, and I'm going to put up our trend line. So we go up to here, and we pull up our vertical line, and we put it at the bottom of the trend here. Okay, so you can pick. We go back to 2013. We see our first green candle here, and we can pop in our trend line. Okay, and as we discussed before, we can see our 3 touches to confirm a valid trend line. We have 1, 2, and 3. Okay, and I'll just configure that. We can change the color. We can change it to black, and we can thicken it up. And there we have our first trend line on our longer term time frame. So again, we look at the market in various time frames. So always go back to the longer term time frame. If you're day trading, it will give you an indication of where we are, okay? And if you're swing trading or position trading over the long term, it will still keep you on the right side of the market. So on our monthly chart here, obviously we're in an uptrend, a bull trend, and all the way back to 2012, and we can see our strong uptrend there, and you can see the market coming into resistance here. And we spoke before in previous module about historic prices and how prices react to historic prices, and I can just show you that in a really longer term time frame how that can work out. Okay, there we go. We bring down our horizontal trend line, and if we go all the way back to December 2002, we have a high price in the market at 12,573, and up to the present day in June 2015, our price topped out at 12,585. Okay, so nearly to the pip over a 13-year period again. So the market will historically react to these prices, and again it topped out back in 2001, hit the price there again in June 2002. So that was 12,590. So it can just go to show on a longer term time frame how the market is playing out. So again, the market will react again and again to historic prices. But back to our trend. We're in our monthly time frame and we are in an uptrend. Now I'm going to bring it into a weekly view of the USD JPY. Okay, and here's our weekly chart. So we'll put on our trend line again. Now when you're putting on your trend line, always put it on the outside. Okay, so you put it on the bottom of the candlestick chart, of the candlesticks. And again, for your valid, to know that it's valid, you 3 touches. So we've plenty of touches here. So you have a valid trend line, and we can just go to configure and increase the width. And on the longer term time frames, you can leave. You don't have to change these every week or even every month. As we go back to our monthly, you can just leave it there, okay? Because you're in a major bull trend, and the only way the market will change direction if you see a major support going. So that's on your monthly, you can just leave that there. On our lower time frames, we may change it daily or even weekly. But again, we go back to our weekly, and again, we can see we're in a valid uptrend. Okay, the market has tested our support. So this is our support here, our long-term support. Our trend line is our support, and the market tested it and it bought again. It didn't test it, it tested it here and it bought again. So once you're on the right side of the trend line, this gives you an obvious indication of where you're going to enter a trade. Okay, and there's various types of markets. As I said, we're going to discuss a ranging market shortly, but in a trending market, you can see quite obviously, you don't need too many technical tools to see that we are in an uptrend. Okay, and your job as a trader is to decide, is the market on whatever time scale you're looking to trade in, is it still in that valid trend? So on our weekly, yes, we're still in our valid uptrend. From our monthly, valid uptrend, weekly in our valid uptrend. And now we pull it back to our shorter time frame. Again, we're always looking at time frames. Okay, we're never just trading in one time frame. Even if you're, as I say, day trading, you might be trading off an hour or half an hour, but again, always go back to the longer term, because the longer term is the stronger trend line. Okay, it's giving valid data of where the market is. So again, on our daily, pull up your horizontal trend line, put it at a valid bottom, and we pull it up here onto and just place it below the body of the candle, the full body of the candle. Okay, as we can see it there, it's just below the full body. And again, we can configure and we increase the width. This is just a visual thing, and you can change the colors, as I said. And but the main thing is you have a valid trend line. Okay, so 1 touch, 2, 3, and again we've a couple of touches there. So we're still, this is on a daily time scale, we're still in our uptrend. Okay, we're getting closer to the support, as you can see, because we're getting closer to the price. We've gone from a monthly to a daily, so we're right up to June 2015, and we're still in our uptrend. So if you were entering the market, where would you place your trade? You're looking for support. Okay, so if the market comes down and tests your trend line, this is your support. If it tests that, you're looking to take your trade. If it breaks below, well, you're going to have to take a think, is the market going to sell off? And again, in our fundamental module, we'll be discussing the reasons, both technically and fundamentally, why you'd be taking a trade. But from a technical point of view and using our trend lines, this is our trend line tool, and a very simple but effective tool of where you're going to place your trades. So again, monthly, weekly, and now daily, we're still in our uptrend and in our valid uptrend. And it's that simple. Once you find a valid trend line, you're on the correct side of the market. Okay, so since 2012, we still haven't broken this trend line, so we're still in a valid uptrend. And I'll bring it down to a 4-hourly. So this will bring us right into today. Okay, and this is a chart I had from earlier, my trend line from earlier. So we'll just delete this trend line. Here's our upper bound trend line. So again, we'll build our trend line, place a valid bottom, and we look for our valid level. So just place it below the body of the candlestick there. And there we have it. And we'll just again, we can configure it and just make it that bit wider and close. So again, from our monthly all the way down to our 4 hourly, we're still in an uptrend, but as you can see, we're testing it because this is, you're getting into your day trading here now, okay, on your time scales. But we're still, as you can see, on the correct side of the market, and we're getting into our tighter range, okay. So we'll be talking about ranges shortly, but look at our range is getting tighter. But again, you're still in a valid trade on the correct side of the market once it remains above this line. And why, if I got the line at the top here on our 4 hour, well, that's off a valid top, okay. And that price, it was at the 12,585 top. I remember we went back to our monthly again. This is why we're using different time frames. Our monthly top again, 12,585. So that downward trend line is more visible on our 4 hourly chart. So that's why we're coming into our resistance off that high, okay. And that high again goes back to 2002, so it's a valid top. It's a strong resistance level. It's a long-term strong resistance level. So the market tested it on our monthly in June 2015, and again we're starting to test it again. So now we have to make the decision. The market is getting nice and tight. Is it going to break above that high, or is it going to break it below? But again, we're looking for confirmation, and our trend line will tell us, okay, will tell us. We've tested it once. We trended down a little bit. We went back up and tested it again. Market wouldn't buy it, and it sold off again. And now here we are at the bottom. So we're going to look to buy it. Once it's tested it, so it's still tested it and it's still in an uptrend, but it's getting close to making a decision. Is it going to buy it up again and break through this line, or is it going to break below? So there we have our uptrend on our USD JPY. Okay, so from a monthly all the way down to our 4 hour chart, and we can see our price levels going back from our uptrend in 2012 right to the present day, right to the present 4 hour candlestick here, okay, right up to date, and we're still in our uptrend. So the main thing is to keep these charts simple. Take one or two tools, okay? The first, as I say, your first job is to indicate what are we doing. Are we trending or are we ranging? So right now we're looking at our trending market, and our USD JPY is in a valid uptrend, okay? And we don't need any fancy technical indicators to tell us that that is what's happening right now. We're in an uptrend, and that's what you need to know. Now, shortly I will show you how to add one or two technical indicators, but no more, okay? We don't need to have too much in our charts. Our main thing is price action, and right now the price action is buying, okay? So we're going to look at a downtrend now, okay? So I'm going to pull up in our Euro USD on our monthly time frame. So again, our valid trend line going back to it's July 2008, okay, and we can, as we can see, valid trend line, 1 touch, 2 touch, 3 touch, okay, so that's a valid trend line. So as you can see, the market is it's selling off, and it has been, so it's in a valid downtrend, and that's on our monthly. So remember, on an uptrend, you want to put your trend line on the bottom, okay, so you want to put your trend line on the bottom here if you're looking to trend it up, okay, in an uptrend. So just delete that there. But in a downtrend, it's on the outside, okay? You just put it on the outside and place your line down. So there's our monthly Euro USD, and we're in our downtrend, okay? We pull up our weekly, and again, we're in a downtrend, and then we from 2014 here, in May 2014, we had a steep sell-off, okay? We had a steep sell-off. One of the reasons, fundamentally, again, this is a technical module, but fundamentally, at this point of time, the ECB was talking about bringing in the quantitative easing, which was the bond buying stimulus program, okay? And that was one of the fundamental reasons why the market sold off. So again, fundamentals and technicals hand in hand. But from a technical point of view, we're in a long-term downtrend, and again, the market sold off, and we're still in our downtrend on our weekly time frame. We go to our daily time frame. Again, still in a valid downtrend. Okay, 1, 2, we've all our touches here, as you can see, and the market is in a downtrend. And we pull up our 4 hourly on the USD JPY. And again, the market is selling off. Again, it falls off and it will touch support and resistance level. So it's not going to just fall off and keep falling off. So it'll come up and it'll test. So again, it tested this trend line, but look, the full candle body could not break above it. We have these spikes above, and this is we call this noise. Okay, so there could have been some news out in the market just spiked up, but the full body of the candle never closed above the trend line. If the full body does close above the trend line, it may signal a change in direction. But so far, from our monthly all the way down to our 4 hourly here again, the market is still selling off on the Euro USD. So it's trading inversely. It's trading in the opposite direction of the USD JPY. So this market is selling off. So there we have two inversely correlated markets. Okay, two markets, the USD JPY, which is in an uptrend, and the Euro USD, which is in a downtrend. And that's how you place your trend lines onto your chart. Okay, and if you want to go into a lower time scale again, as you can see, this is our hourly, and if you're day trading, you will be coming into your hourly and your lower time frames. But remember, the higher time frames are the ones that you want to look at to confirm your trend. Okay, so from our monthly all the way down to our 4 hourly, we were in a valid trend, and even our hourly, we're still in our valid trend. Okay, so that was your description of trend lines. Okay, as I say, a simple but very effective tool. The main thing is the rule on where to put them. Put them at valid points. That's the main thing to do, is to put them at valid points. Okay, so now I'm going to discuss the a range bound market. Okay, so I will pull up our, again, we go back to our USD JPY, and I will pull up our monthly time frame or our weekly time frame. We will discuss our range bound market. Okay, so a range bound market is a market where the price ranges between a specific high price and a low price. The higher price represents a major resistance level in which price cannot break above, and conversely, the low price acts as a support level which price will also not break below. Ranges develop in various ways. A short-term range may develop near the top of an uptrend as buyers and sellers try to gain control of the next trend. Or as we can see on the USD JPY, from February 2014 here, okay, February 2014 to August, I'll show you now, from August up to August 2014, we have our tight range. I'll place the two horizontal trend lines. So we're still in an uptrend. Okay, we're still in our uptrend, but we're ranging. As you can see here, from August, or from February 2014, we made a bottom, and we never broke above the 10.323 level on during that whole period. So 7 months period. So this is our ranging market. We're in an uptrend, but price won't break above. Okay, the market is ranging, as you can see. It didn't break above until, okay, August 25th. So the week beginning August 25th. So when I say the market closed above a trend line, here we can see it. The market closed above and off went back into its uptrend, its bull trend. So from January, February 2014, the market was in a range. Okay, it wouldn't break above this horizontal trend line and trend line, and it wouldn't break below the horizontal trend line. So this is a range. The market is tick tock, and that range lasted for over 7 months. Okay, so again, that is our basic range. Okay, now we can get a longer term. In a longer term trend line like this, it's a bout of indecision as prices will congest and movements will stay closely between support and resistance levels. So it's quite a tight market. And a range bound period will occur when prices are bounded between support and resistance levels. Ranges will not last forever, so once identified, they need to be treated with caution. A range can last for a single trading session or over a longer period of time, as we can see here. So to manage your risk correctly and place your stops at valid prices to protect your equity in the event of a price breakout. These will occur when the price breaks from the range and enters into a new trend. So as you can see, we don't know when it's going to break out, okay, but it broke out here. It's over a 7-month period. It's ranging and it's ranging, but then it did break out up here, okay. And a technical indicator that you can use when range trading is the Bollinger Band, okay? And I'll show you how we can use our Bollinger Band here now. We'll go to our technical tools and we will pull up our Bollinger Band on price and add in our Bollinger Band. Okay, now the Bollinger Bands contract when there is less volatility in the market and expand when there is more volatility. When the bands are thin, volatility is low and there should be little movement of price in one direction. A breakout may be on the horizon when the bands begin to expand and may signal the end of a range. Okay, so here we can see our Bollinger Band. It's contracting. Here's our tight range, and the market is staying within the Bollinger Band range. Okay, and it was getting quite tight, and it expanded when the market broke out. So you're using your your longer term trend line to realize that we're still in a longer term uptrend, that the price didn't break below, and you use your 2 vertical trend lines to see that we're in a longer term range and the price is it's up, down, and it's trading. Now we will never know for sure when the market is going to break out, but when you see the Bollinger Band trying to expand here and the price is broke above our upper horizontal level and the price is still above our upper bound trend line, that's 3 reasons why we're looking for the market to break out. Okay, so again, we're ranging. It's testing the upper horizontal. It's broke above it. 1 reason. 2 reasons. It's still above our long-term trend line. And 3 reasons. It's breaking out of the Bollinger Band in the tight Bollinger Band range. So there's 3 reasons why. So trading is patience. We're waiting. You can trade this range for 7 months, but when the price changes, go with the price. Okay, so there's 3 valid reasons why we're looking to buy that market. Okay, 3 solid reasons and 3 simple tools we can use. But it's about placing these at these levels and these trend lines at valid places. Okay, so we can see a valid bottom. We can see price didn't break through, and we can see on our longer term trend line, price never broke below it. But when it did break above, it's a bull market. Okay, the longer term trend is up and the market began to buy back again. Okay, so that's our Bollinger Band, our vertical trend line and our horizontal trend lines. And there's 3 tools we can use, 3 simple tools to keep us on the right side of the market. So to reiterate, the basic principle of range bound market is price moving between a high and a low point, and by identifying and trading the range, you can trade accordingly. So by knowing which type of trading environment that you are in, whether it's a trending or a ranging market, then you are putting the odds of trading profitably squarely in your favor. So thank you for listening to our module on trending, trends and ranges, and I hope you will enjoy module 7 on Fibonacci numbers and retracements. So thank you for your time and goodbye.